Yeah, good morning, everyone. So we saw yesterday very good bounce back in US market from the low, even after the negative figure on the inflation side, wherein the inflation came higher than expected at 0.4% month-on-month increase against expectation of 0.2. But once post these numbers, market declined very sharply and then recovered also much sharper than what it declined and ended very much in the positive, more of indicating that some reversal of trend. What we feel that this is mainly driven by the results seasons which is starting in US. Now the event of economical side and a lot of banks are reporting results today. We had seen that IT companies in India are reporting very good numbers, well ahead of expectations. So quite possible that they are the other companies in the US may not be still feeling pain of economic downturn much, and whatever the decline which has happened in the shares in last 6 months are quite substantial. So quite possible the results may be better than the what we had seen in the prices. And similar trend was also visible at the time of the first previous quarterly results. So quite possible people may be expecting that. One need to watch how the result come out. Out of the all indices, the major gainer in the US was also banking, which has gained maximum in yesterday trade, and then followed by energy and then IT shares. Quite possible the impact of that will be visible in India as well, specifically on the IT shares, which may see some up move because of this, as most of the company have declared good results. So whatever the US revival we may see some positive trigger on the IT share as well in that respect. Apart from that, oil was up by around $2 yesterday, and that has helped the energy stock over there moving up. And most of the Asian stock moved up are up by around anywhere between 2 to 3%. So probably we may be seeing a similar trend in India as well. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Looking towards the Asian markets, our market is likely to open with a gap up opening, and we are likely to witness some sideways momentum after the gap up of almost 300 points. As of now, looking towards the gap up opening, 17,300 will act as a strong resistance level. If it surpasses that level, then this pullback rally is likely to be extended towards 17,370 to 17,470 levels on the higher side. Whereas on a downside, the first immediate support is placed at 17,170 to 200 levels. So that will be the first support zone. If Nifty breaks that level on the closing basis, say 17,170, then we are likely to witness some profit bookings, which might drag a Nifty towards 17,000 psychological mark. Now, 17,000 will act as a very strong support level provided by its 200 DMA. So as long as that levels remains intact, small pullback rallies can be witnessed in the markets. But 17,300 will act as a very strong resistance levels for the intraday basis. Coming towards the bank Nifty, 39,200 is the first resistance level. We need to keep eye on it. Any more above that level, 39,370, 39,500 levels can be tested on the higher side. Whereas on the downside, 38,600 and 38,400 are the crucial support level. We need to keep eye on it. So today's rally is purely taking a clues from the global markets. We are likely to witness some upticks, but probably we might witness also the selling pressure at the higher level. So stay cautious with this gap up opening. Try to book your profits at the higher level, or else you can maintain the strict stop losses, trailing stop losses, and carry your positions. Coming towards the Nifty Finance, 17,100 is the first resistance zone. Above that level, 17,300 levels can be seen on the higher side. On the flip side, 16,700 16,700, 16,500 are the support levels we need to keep eye on it. Stock specific, Sun Pharma is really doing very well on the technical front. This particular counter is just has given the cluster breakout at around 760 965 levels, and we believe that it has a potential to enter 1020 levels on the higher side. So Sun Pharma, one can take a long position in this particular stock. 4949 will be the first stop loss. We are looking for a target of 1015 levels on the higher side. I think that's it from my end. I request Amit to take a call forward.
Yeah, thank you everyone, and thank you Swati, madam. So overall, as per the derivatives data front, if we look at the overall OI structure, it is quite visible that at 17,400 call rider positions are getting added up, and at 17,200 strike. So 17,400 will act as an important resistance zone, while against that we are seeing that at 17,200 and 17,000 striker put at positions holding heavy positions. So 17,200 to 17,000 would be the supportive level for the Nifty. So in today's trading session, once if Nifty goes above 17,400 level, then shifting of position would be visible in the market, which might take a positions on the upper end towards 17,600 to 700 level. But as Swati madam mentioned that once in today's trading session, the Nifty is getting open on a gap up note, so it would be a quite possible chance for everyone to book some long profits and again hold in the market, because currently if we look at the India VIX is still holding very strongly above 18 levels. So volatility would be very high and the fluctuations would be very high. And if we look at the overall FI position also from continuous past 1 week, we are seeing that FI is almost onto a selling mode. Almost we are seeing from 5 trading session around 15,000 crore positions have been sold by the FI. So this might be a sort of pullback positions. Once if Nifty goes above 17,400 level, then only create new fresh long positions, or else try to book some profits once if Nifty goes below 17,200 level in today's trading session. If we look at the overall sector and stock specific, the selective counter which looks positive in today's trading session would be Sun Pharma. We have initiated Sun Pharma in the monthly call also from the derivative front, and in yesterday's trading session we seen that Sun Pharma gave close around 52-week high and more strength would be visible. We expecting Sun Pharma to move towards 1020 to 1050 level on their upper end. So Sun Pharma looks positive in coming trading sessions. The other stocks which looks positive is Metropolis, GNFC and Hindalco. These three counters are continuously into buying trend. So we expect these three counters to show some possible uptrend in today's trading session. That's it from the derivative front. Thank you.
Good morning. Power Mech Projects joint venture with RITES has received an order of 500 crores from Bangalore Metro Rail Corporation. This is positive. On the results front, Angel One result has improved. Market share in NSE active clients came at 11.2% versus quarter on quarter 10.6% and year on year 9.3%. Also, F&O market share came at 21.7% versus quarter on quarter 20.8% and year on year 21.3%. So improvement on both fronts. Broking revenue increased 10% quarter on quarter, 44% year on year. EBITDA increased 14% quarter on quarter, 51% year on year, and also margins increased to 40% now versus 38% sequentially. Similarly, profit also increased 18% sequentially. So all in all, good numbers. Stock is trading at PE of 16 times quarter 2 annualized earnings. Also, the latest monthly numbers of September were very encouraging. So all things look positive, but we have to be aware of the risk that is there in this kind of business. So only people with high risk appetite can consider the stock at current juncture, because any fall in markets can have a similar impact on the company, like we saw what happened in the June quarter when the quarter on quarter numbers declined and the stock also corrected. So those who are having can hold with a bit longer term horizon. And for fresh entry, we would suggest to avoid looking at the macro scenario. Anand Rathi Wealth result has also improved. AUM grew by a healthy 8.7% quarter on quarter and 16% year on year. AUM now stands at almost 36,000 crores. Revenue grew 3% sequentially, and OPEX was flat. which resulted in EBITDA growing by 8% sequentially. EBITDA margin has now reached 44% versus 42% that we saw for last 4 quarters. So margins have improved. Stock is again trading at 16.5 times quarter 2 annualized earnings. We think the business is such that ROE is at 42% and we can expect growth of around between 20 to 25% for next 3-4 years. But of course, there will be some volatility because of market fluctuations. So even if we keep the valuation stagnant at current levels, at 16-17 times, the stock can provide decent returns of 20-25% compounding in coming years, but one will have to ride through the volatility. Thank you.
Good morning. Infosys posted inline set of numbers for the quarter. TCV came in at $2,744 million. Revenue growth in CC terms QQ came at 4%. Q2 operating margin expanded by 150 bips Q on Q and stood at 21.5%. The company has upgraded the lower end of the revenue guidance to 15 to 16% for FY23 versus 14 to 16% guided last quarter. H2 will be impacted due to seasonality. Wherein the guidance incorporates the same. Operating margin guidance is revised to 21 to 23% versus 21 to 23%. However, even last quarter management had indicated to be on the lower end of the margin guidance, which remains intact. Outlook is neutral. Mindtree posted above expectation numbers for the quarter. The order sign came at $518 million and constant currency growth came in at 7.2%. EBITDA margins came in at 20.5% versus QOQ of 21.1%, wherein the company had wage hike impact. For the year, although the management aspires to have industry leading growth, however, management indicates Q3 and Q4 is a little of caution. Q3 will be a seasonally weak quarter. Overall, on the client front, the clients have the objective of revenue maximization and cost optimization. However, in certain sectors, there is near-term softness. Outlook is marginal positive. CN posted below expectation numbers both on the revenue and the margin front. On the full year, management has maintained the organic revenue guidance to be in the range of 13 to 15% and will add a further 14 to 15% due to acquisition. EBIT margin guidance is kept on the organic level is kept at 13 to 14%. For FY24, the company has the visibility to have a $1 billion revenue run rate. Stock is trading at 12.6 times FY24 EPS. Thank you.
So just to comment on IT sector, though the results reported by most of the companies are strong, and current year growth also expected to be anywhere between 15 to 18% for most of the larger companies. But against that, the valuations, if we compare it with the pre-COVID levels valuations, the current valuations are running higher than the pre-COVID level, even though we saw good corrections in the share price in the recent past. Looking at the current scenario, where the growth is around 15 to 18%, the current valuations are justified or can be even go up. But the concern is that whether the same growth rate will continue in FY24. The most of the expectation is that it will come back to its pre-COVID growth of around 8 to 10%. And if that growth rate comes in FY24, then the valuation seems comparatively higher. As such, we are not seeing share prices moving up. What we feel that since Fed is looking at tightening the interest rate and will continue its pursuit over there and will put pressure on slowdown of the economy, this growth rate will come back to lower level and maybe somewhere around 10% in the FY24. So that will put the pressure on the P expansion. So at such, though we may see bounce back because of good results and all, or bounce back in the US market, but we do not see any great up move from here in the IT sector shares. Apart from that, result for 18th. So Gujarat Fluorochemical is likely to report numbers, and numbers are likely to show improvement both year on year and quarter on quarter. Margin is also expected to expand from quarter on quarter by almost around 100 basis point. So overall result looks positive. Valuations are at around 33 times FY24 earnings, which is, if you compare it with the other peer like Navin Fluorine and SRF, seems more in line with that. Then ICICI Lombard is likely to report numbers. Numbers are likely to show some marginal improvement. Here need to see is the combined ratio. Combined ratio is expected at around 103.5, whereas last quarter it was 104 and last year it was 105. So this combined ratio is gradually improving, but not enough to drive the stock. So we may see some shares is underperforming because of this. This need to come down to 100 or below that, then the stock will start performing. So still time, we need to see watch the result, how the result comes and what is the commentary for the futures. Polycab result is expected, and here the revenue, here the results are likely to be more okay type of results, though revenue will see decline year on year, mainly because of corrections in the metal prices, which has a direct impact on cables prices. So the revenue will come down, but against that, the margin will show year on year improvement of around 200 basis points. So EBITDA in all is likely to increase by around 16-17%. Generally, the targeted EBITDA increase it at around 20%, 18 to 20%. So marginally lower than that, but still reasonably okay. Then L&T Technology is likely to report numbers, and here again the numbers are likely to be okay set of number, wherein revenue is likely to grow by around 4% quarter on quarter in CC terms, and margins are likely to see some decline quarter on quarter from 18.3 to 17.5, mainly on account of increase in the salary and all. Then Safler India is expected to report number. This is more. This is a bearing company. Here the expectation is that quarter on quarter we may see some decline in revenue, and also margin is likely to stable. So more of a result is more of a marginal decline on quarter basis. Then Tata Communication is likely to report result. Here the result is likely to be more of a flattish, wherein revenue growth of around 2% quarter on quarter and 5% year on year, and margins are likely to remain stable quarter on quarter at around 25%. Then KPIT is likely to report numbers, and numbers are likely to show some improving trend, wherein revenue growth is expected at around 5% quarter on quarter in CC terms. Margins are likely to see some quarter on quarter decline because of the salary increase which has been given in this quarter. So overall seems comparatively positive for the KPIT Technology. So that's all from us. Now I'll request commodity team to take up from here.
Thank you, sir. Good morning, everyone. Yesterday, we have seen the sharp decline in dollar index, which is leading to rise in commodity. So prices are expected to edge higher. One can buy on dips. Gold can be bought around 50,800, 750 levels, maintaining a stop loss of 50,600. Prices are expected to test 51,000, 51,100 on higher end. And silver, we expect prices to test 58,000, 58,300. So buying is recommended at 57,200 with a stop loss below 57,500. So overall should rally, and one may buy on dips. Crude oil prices could witness a sideways movement, though buying is recommended at 70 to 80, 70 to 70, which is a good support area, and prices could test 7400 on higher end. So buying is recommended in crude. Natural gas also. We expect prices to test 560, 570 levels on higher end, and one should initiate a buy around 548, 547 levels. Copper, though witnessed gap up, but we expect to rally further. One can initiate a buy if sustaining about 660. Else, one can wait for a correction till 658, 57 levels, and again enter long. Prices are expected to test 670, 675 on higher end. So buying on dips in copper is also recommended, and zinc we feel 275 to 76 levels are likely to test on higher levels. So buying around 270 to 271 with the stop loss below 269, and aluminum we feel buying should continue. 215 levels are expected on higher end, so buying in aluminum is also recommended. That's it from me. I'll ask Ria to take over from here. Thank you very much.
Thank you, sir. On the currency front, like sir said, dollar index witnessed a sharp decline from the highs of 113.40, trading right now at 112.32, and this has resulted into the USD INR open as well. Yesterday was US inflation data, and the major highlight was the core inflation, which has risen to a 40-year high. Um, it the US inflation numbers have also come higher than what was expected. It came at around 8.2. Expectation was 8.1. So all this is indicating that the inflation in the United States is here to stay, and it will be quite a task for the Fed to get the inflation down just by doing rate hikes. Some the some innovative steps need to be taken in order to get the inflation down. Taking into consideration the core US inflation, it is indicating that the consumer, they are paying more for the basic goods and services, and thus I think it will be the downslope for the inflation into the US will take a much longer trajectory than what was expected by the Fed. USD INR has opened on on a appreciating note at around 82.38, and the support for the pair is placed at 82.18, and if it breaches that, one can go short in the USD INR for the target of 82, 81.95. You can keep SL at 82.45. So that's the strategy that you can follow into the USD INR today. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.